Assalamualaikum and a very good morning to Madam June. Today we are going to present about marine cargo insurance, and the company that we pick is Tokio Marine Insurance. We are from BA1115D Group 4. So, this is our table of contents, which includes name of policy, the introduction of the policy, the scope of cover of the policy, the benefit of the policy, and the exclusion of the policy. Next, this is our team member, which include Atika, Sayang, Shafika, Nur Adila, and also Nazifa Asna. So, without further ado, let's move on.
Tokio Marine is Japan's first insurance firm founded in 1879. Now offers a wide range of general and life insurance products. Tokio Marine is one of the world's most diversified and financially solid insurance businesses operating in 38 countries and growing. Tokio Marine returned to Asia in 1945 and has focused on life and general insurance solutions in several ASEAN nations. They grew through organic acquisition and joint ventures. More than 65 years ago, Tokio Marine Life Insurance Malaysia Berhad was TM Asia Life Merchant Berhad. In March 2007, Tokio Marine and Nichido Fire Insurance Company Limited and Asia General Holdings formed a strategic collaboration to expand into Malaysia. They have 16 branches nationwide and pride themselves on offering innovative life insurance solutions to be trusted life insurer for countries. Tokio Marine Insurance offers 4 types of marine insurance. First is marine cargo insurance. Second is goods in transit insurance. Third is marine house. Lastly, warehouseman/carrier liability.
Thank you, Nazifa. I'm going to proceed with my part, which is the introduction of the policy. Marine insurance refers to a contract of indemnity. It is an assurance that the goods dispatched from the country of origin to the land of destination are insured. Marine insurance covers the loss or damage of ships, cargo, terminals, and includes any other means of transport by which goods are transferred, acquired, or held between the points of origin and the final destination. Marine insurance is very advantageous for business owners who travel frequently or deal with high-value commodities. The term originated when parties began to ship goods via sea. Despite what the name implies, marine insurance applies to all modes of transportation of goods. For instance, when goods are shipped by air, the insurance is known as the contract of marine cargo insurance.
Thank you, Ayu. So now I will continue about the scope of cover for marine cargo insurance policy. First one, Tokio Marine cover damage caused by fire and explosion during the transportation of goods. If your cargo suffers losses due to this event, the policy can help reimburse you for the financial impact, ensuring your shipment are protected. The second one covers the policyholder against risks like vessel or craft being stranded, grounded, sunk, or capsized during the transportation of goods. In this case, the insurance help mitigate financial losses by compensating for the damage or lost cargo. Third one, if an incident occurs, the policy help mitigate financial losses associated with damage or loss of the insured cargo. So the fourth one covers collision or contact of the vessel of craft carrying the insured goods. If the transporting vessel is damaged due to the collision or contact incident resulting in loss or damage to the cargo, the policy may provide compensation to the insured party for their financial loss. Next, discharge of cargo at port of distress. Refer to the coverage for losses incurred when cargo needs to be unloaded at a port other than the intended destination due to an unforeseen event or distress situation, like ship breakdown or adverse weather condition. This policy provision help protect against financial losses associated with diverting and uploading the cargo at an unplanned port.
Today I will present about the benefit of the policy. For the benefit of the policy has 3, which is the first is institute cargo clauses A,
and second instituted cargo clauses B, and last instituted cargo clauses C. Okay, for the instituted cargo clauses has two different, which is the first is 1.1.82 and second is 1.1.09. Okay, let's go. We found what the difference between this institute. This institute is cover commences when the goods leave the warehouse or at the place of storage named in the policy. The second is for the commencement of transit continue during the ordinary course of transit and terminate. Second is cover commences when the goods is first moved in the warehouse or at the place of storage. The second is purpose of immediately loading into or onto the carrying vehicle or other conveyances for the commencement of transit. Okay, institutes cargo clauses A is cover all risk of loss of or damage to the goods in the ICCA except as provided in the exclusion. Okay, for the institute cargo clauses B is 17 that this cover, which is the fire or explosion, vessel, overturning, collision, general average scarifics, jettison, and the last version overboard. Okay, for the last is institute cargo clauses is cover fire or explosion, vessel, collision, discharge of cargo at port of distress, and general average scarifics, jettison, and last general average and salvage charges.
There are two expressions of the policy. First, institute cargo clauses A, B, or C 1.1.82. First, loss, damage, or expense attributable to willful misconduct of the issuer. Next, loss, damage, or expense arising from insolvency or financial default of the owner, manager. Other than that, the underwriter waive any breach of the implied warranties of seaworthiness of the ship and fitness of the ship to carry the subject matter and ship to destination. War and street, this is normally included by the war from the institute. War and street clause subject to additional premium. Second exclusion of the policy is institute cargo clause A, B, or C 1.109. First, loss, damage, or expense caused by inherent weight or nature of the subject matter issued. Next, loss, damage, or expense arising from unseaworthiness of vessel or craft, or unfitness of vessel or craft for the safe carriage of the subject matter issued. Loss, damage, or expense also arise from unfitness of container or conveyance for the safe carriage of the subject matter issued.
Moving on, so why you have to buy this policy? There are three reasons. First, accident happens. As we know, the technology is developing ever more, but the transport still remains a risky business. The risk could be managed by choosing a reliable logistics service provider and appropriate transport packaging, as well as purchasing a cargo insurance, which is from Tokio Marine Insurance. Second is losses may be big. The marine insurance is a necessity for the carriage of costly goods because carriers have limited liability. Depending on the choice of insurer, you may insure your goods up to a certain amount above their invoice value, and in case of loss, you will be indemnified according to its rate. Third is faster handling of the claims. In most common cases, to settle a marine insurance claim takes much less time in comparison to a liability claim. This is valid, especially for claims where the cause of damage is uncertain or the claim is for a significant amount and requires a thorough investigation. So that's all from us. Thank you.